This summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship opportunities.
Hello, everybody, and welcome to another edition of iGaming Next Weekly News Live. I'm joined today by Nico, our regular co-host, and also by the man for the big occasion, Mr. Pierre Lind, everybody.
Oh my God. Big build-up, big disappointment. Story of my life. But it's great to be here.
Yeah, it's great to have you on, Pierre. I've had a pretty stressful day covering these quarterly results and then the Gambling Act review white paper. So if I just suddenly fall asleep through exhaustion, it's great that you're here to take over if need be.
I think we need to give you like a free subscription of Red Bull or something, Jake.
Yeah, that would come in handy right now.
Package.
I've got my coffee to the side of me, so that'll do for now. Nico, how are you doing? You're talking about your shirt off air. Anything you want to tell the listeners about it?
No. It's like the carpet. Where was this LinkedIn post that one of the hotels, they kind of placed a 3D carpet, which just looks like you're kind of, falling into a pitfall. This protects people from actually running through the hallway. So it's pretty much the same for my shirt today as well. So all good. So it's a test. It's an empirical study, and we just want to see if this increases commenting on the show. And maybe I will just continue with this shirt as well. So fingers crossed.
Nico,
it's just an empirical study.
I have a question for you, Nico. Were you born without hair?
Indeed, I was. Right. So I was born poor. That's why I'm Nico and not Nicolas. So as soon as my hair is done, I'm officially allowed by police to take off the helmet. So just kind of saving money as soon as I want to ride the motorbike. So all good, right? I can spend the money somewhere else.
That you can sleep anywhere. You have like a pillow full of hair, basically. But anyway, that's a story for another day. Sorry, Jake.
Yeah, poor old Nico. He's been grilled at the start of the show.
No, all good. Used to it. It's a German origin.
You're a good sport, Nico. And if Nico's shirt is making you hallucinate, guys, then please do comment in the chat and let us know. Good to see some comments coming in already from Bogdan. Thanks a lot for your support, Bogdan. You're always here. He says time seems to be passing quickly. I can't believe last Thursday was 7 days ago. Tell me about it. I know exactly how you feel. And hello as well to Katie, another regular listener, and to Elizabeth, our producer, who I came through on my promise, and you'll see I've got a brand new microphone. I finally managed to set it up this week. It only took me 3 weeks to plug the USB cable in.
Your voice is silky smooth, Jake. I love it.
Yeah, well, first time for everything, Pierre. We've got a hell of an agenda lined up for today. But first of all, I need to thank our sponsors, Betson and Kindred Group, for making this happen each and every week. let's have a look at the running order before we get into Nico's 10 and 5. So we're going to be discussing the Gambling Act review, obviously, which came out today, the long-awaited white paper. And then we've got some quarterly results roundups for you from some of the biggest companies in our industry, Evolution, Kindred, Betson. The list keeps on going, really. But before we dive into those, Nico, do you want to take it away?
Yes. So I will start with one of the topics we will just discuss in deep, which is about the white paper, UK gambling white paper to limit maximum online slot stake based on age bands. So the UK government's gambling white paper is of course expected to have major impact on online operators, according to the Times, with the maximum stake for online slots machines being split into 2 age bands. So £2 for those under 25 and £15 for those who are older. And as said, we will just leave it with this, as we will discuss this later on. Heading over to the US, the majority of US gaming executives have a reserved on future outlook for the iGaming industry. Within an American Gaming Association, short AGA, survey, 60% of gaming executives were asked characterize current business conditions as good, while 35% as satisfactory. This compares with expectations of future performance, with only 20% of expecting conditions to be improved, while 64 said that the environment would broadly be the same. So no change in status quo. Then staying in the US, the NFL suspended 5 players for breaching gambling policy. So based on, as we all know, the NFL Network insider Ian Rappaport, that league suspended the following 5 Alliance receivers: Jameson Williams, Quintus Cephas, Stanley Berryhill, and safety CJ Moore, and from the Washington Commanders, the defensive Shake Toney. So while Williams and Berryhill received a 6-game suspension, Cephas, Moore, and Toney will all suspended indefinitely and can apply for reinstatement after the 2023 season. An official spokesman said a league review uncovered no evidence indicating any inside information was used or that any game was compromised in any way. So, welcome to the sports betting world as well. Shout out to the NFL. So, Las Vegas Sands, they signed a preliminary 99-year lease for their New York location. As we all know, there are 3 casino licenses where you can apply for New York, and this is what we all speak about. So Las Vegas Sands, they struck an agreement with Nassau County, New Jersey, New York, under which the gaming operator gains control of the 72 acres land in Unidale of Nassau Veterans Memorial Coliseum in Uniondale. So the Memorial Coliseum used to be the New York Islanders' home arena until 2017. And as said, Las Vegas Sands are securing their place in the run for the casino licenses in New York as well. Same topic, Mohegan is seeking to boost their New York casino bid odds by pledging local businesses support as well. So, as said, Mohegan is pledging to support local small businesses and already signing up loyalty programs partners in the Big Apple as well. So they would develop and operate a casino portion of a complex which will host more than 1,000 rooms, 2 residential towers, and substantial green space. So we are thrilled to see what will happen next. Then still staying in the US, Yahoo acquired the social sports betting app Wager. On Tuesday, Yahoo announced that they acquired Wager. It is a 3-year-old social sports betting startup based out of Nashville. Unfortunately, the terms of the deals were not disclosed, but to give you some insights, Wager, they already raised more than $16 million in funding from notable investors, including the New York VC firm Greycroft, Alexis Ohanian's 776, the Tinder co-founder Justin Mateen, and the Kraft Group as well. So probably we will touch down what's next for Yahoo as well. Staying in the M&A and funding round, Rivalry, they received a funding of 7.3 million US dollars, an investment round led by Pinnacle. GAN are about to receive a 30 million private loan by Beachpoint Capital Management, a Los Angeles-based investment manager, which has made a 30 million private credit investment into GAN as the group looks to drive improved shareholder returns. Then two more to go. A survey suggests that more than half of Germans and Britons favor total ban of gambling ads. So based on a survey of roughly 1,000 adults, it turns out that 57% represented are in favor of a general advertising ban on gambling. Staying on the same topic, we had the same poll by the University of Bremen in Germany, representing 12,000 people. And this survey found out that 85% of non-at-risk players stated that there are no changes in their gaming behavior based on advertisements during Bundesliga matches, while, and now it gets interesting, 41.2% of already addicted players or being on the verge of becoming addicts changed their betting behavior based on the ads. So as a result, if you want to take out or guide people which have implications of addictions, you force them or you kindly move them into the regulated markets, which is a good thing. And last but not least, Tipster are about to surrender their MGA license due to the things which had happened last week, Thursday. There are rumors going around about why Tipster had been investigated, and it's quite interesting what comes out. But as long as we don't have facts on the news channel, we can't discuss this. So these are my 10 and 5.
Smashing job, Nico. Thank you very much for those. Great to see some iGaming Next stories in amongst that roundup as well, as always. And obviously the first story you touched on there was about stake limits as part of the gambling review. And those kind of broke overnight as some of the national newspapers got a leak of the final document, although it seems to have changed again almost. And we've been waiting nearly 2 years now for this white paper to be published by the UK government. And finally, the kind of initial draft of it was published today around lunchtime. So I think us and the rest of the trade media and the national media have all been kind of trawling through that document to try and find out what's changing, what the biggest changes are, etc. Pierre, I think you've probably been, following this to a degree as well. I can obviously run through some of the major changes, but did anything kind of leap to your attention straight away?
Well, I think actually what is interesting is how the markets reacted to this news. So obviously this regulation seems to be favoring the land-based casinos quite heavily. But actually both Entain and Flutter reacted positively on the markets with something like 3% up on the release of the news, essentially. So it seems actually that the markets are quite happy about the regulation, or rather, they were. I suppose that there wasn't anything disastrous that was announced today that wasn't expected. Let's say. So from that perspective, I think the kind of the industry kind of took a sigh of relief to some extent. It sounds like by the reaction of the markets. What do you make of it, Jake? Like, what are like the major points? Would you say?
Yeah, 100%. I agree with you. I think the licensed operators will be really pleased with what they've seen in the white paper. They've managed to avoid a lot of the worst case scenarios. For example, banning VIP schemes, and it sounds like there's a lot more consultation still to come. So these could all still be subject to change. But I think the reason the share prices haven't moved too much or have even reacted positively is because we've known about a lot of these changes for such a long time that they've already been factored into the share price. Let's just look at the changes quickly then. So the biggest one probably is the new stake limits for online slots. So they've committed to a default maximum stake of between £2 and £15 per spin. And it's likely to be limited to between £2 and £5 for those between the ages of 18 and 24. So, that's obviously the biggest kind of black and white rule change for the online casino operators. Again, though, I think a big reason the share prices didn't move off the back of that news is because most UK licensees have already implemented these stake caps on a voluntary basis. I think Flutter's capped at £10 for online slots. I think 888 said recently it was the lowest in the UK industry at between sort of £5 and £10. So the fact that it could go up to £15 even for over 25s might be a benefit to these operators that they weren't previously expecting. So I think that's probably the headline takeaway from today's review, as well as something which has been much discussed, which is obviously on the topic of affordability checks, which the government has now seemingly changed to player protection checks.
Wasn't it, Jake? Wasn't there one of the politicians who said that affordability checks is not is too intrusive? Like it's not up to us. Do you think it's like optics here that they just that they are just changing the way they phrase it for that reason?
I think it's exactly that. I think that was Chris Philp, who was one of the million gambling ministers we've had since the review was announced. But I think it is an optics play because the Conservatives are kind of obviously a right-leaning government, and they've been accused of nanny statism by gambling stakeholders and sort of harder line Tories, and I don't think that's how they want to be viewed. So they don't want to put themselves in a position where they're telling people how they can spend their money. So if you rebrand it to player protection checks, then it sounds like you're protecting the consumer. So there's likely to be less pushback there. But if we look at exactly the levels that they've discussed, so it's worth saying pretty much everything in the review is still subject to a consultation. So even after 2 years, we don't have definite guidance. But the Gambling Commission is going to consult on these two forms of financial risk checks, as they're being called now. So background checks at a moderate level of spend, which is £125 net loss within 1 month, or £500 within 1 year. So that's not very much at all. But what the government said is that these checks at those levels will be really non-intrusive, and they'll occur only in the background, as if any sort of e-commerce business was conducting a consumer check. Like, you're not going to know about it as the customer. So I think they've allayed some fears in that respect. And then the second threshold, which is where the more intrusive, detailed checks do kick in, is going to be set at £1,000 net loss within 24 hours, or a £2,000 net loss within 90 days.
Yeah, it's interesting, and so it seems again that like the industry kind of lives to see another day in the UK. But Jake, I'm really curious to know the stake limits that the government has announced. Do we know by heart comparatively to other markets and the regulators that have limited other markets, like what those stake limits are? Like in Germany, for example, the stake limits as well. What are those in comparison, Nico? Do you know by heart?
Yeah, I know by heart. So first of all, the limit per spin is €1 per spin, which is way less than we have
here. It's
exactly.
Yeah.
Exactly. And in Germany, you have a deposit limit. a deposit limit based on the vertical. So for sports betting, you can increase the monthly deposit limit up to 30,000 euros, which applies to 1% of your player database. And they need to provide, it's called the extended due diligence on the customers. They need to provide source of wealth, background checks, etc., which is quite offensive, to be honest. In between, or 1,000 euro deposit limit is the regular, is the normal. And if you want to increase it up to 10,000 euros, which is also doable just for sports betting, not for slots, not for poker. So just for sports betting, you can increase the monthly deposit limit, and then you also need to run the extended due diligence on your customers as well. So this is the comparison to the UK. As said, it's a deposit limit, not the net loss limit, which I'm pretty sure the calculation is in between what the customer won during the month and what he lost, what he has deposited, etc. I didn't take a look at the formula on how you can calculate the thing or the net loss limit in the UK, but I'm pretty sure it's something around winnings and deposits.
Right. So kind of in summary, if you see the regulatory changes in Europe that has been taking place over the years, comparatively, it feels like the industry came away fairly intact, essentially, as a summary with the UK updated regulation. But we are so used to being beat down constantly as an industry, even though it puts further restrictions, it kind of feels like a win for the industry in some sense.
Yeah, I think you're right. I think obviously the way the industry was acting maybe 4 or 5 years ago, this is a really significant change. But because it's been such a slow process, obviously it's been communicated by the government. Like the gambling commissions come in with a lot stricter stance than previously. Like operators, they've kind of taken note of that and have been doing this stuff anyway. So it's not as much of an overnight change as they might have expected, but there are still some negatives in there. I mean, there's going to be, it sounds like there's going to be a clamp down on bonusing as well. So, free bets and free spins, although they've not provided any guidance on what that might be. But yeah, overall, I think there's probably more pluses for the industry in here than there are negatives. I mean, there was talk, obviously, that the Gambling Commission would get more enforcement powers, and it is going to, but they're going to be pretty much exclusively used to combat the black market, which is obviously a great thing for licensed operators. And then, as you alluded to, Pierre, that it's super favourable to land-based gambling operators as well. There's like pretty much wholly positive for casino venues. They're able to branch out into sports betting. They can increase the number of gaming machines in their venues. They can offer credit to overseas VIPs. So it's pretty much a liberalisation of the land-based sector. And you talked about share prices and Rank Group, which is a massive land-based operator in the UK, which runs the Grosvenor casino venues and the Mecca Bingo venues. Their share price went up by 6%, which I think is the biggest climb of any UK licensed operator today.
Right. Makes sense. I can see that Phil has a more pessimistic comment here to us. What do you make of this take?
I haven't read it yet, to be honest with you.
Phil is saying basically. Yeah, go ahead.
No, I can see what he's saying. These checks, that are being conducted in the background aren't without a cost, I suppose. So if they're not doing those in-house, then it's going to be a costly process for them and not a particularly fast one as well. There's some comments there on Germany as well. German players have vanished to offshore. I don't think we'll see a similar situation in the UK where customers go to offshore operators. I think the license market still offers, a good customer experience overall. I think this will affect, sort of high stakes punters and regular punters, those people that, are super into their horse racing and everything else. But for the sort of recreational punter that a lot of the biggest companies in the UK are targeting at the moment, I don't think they'll notice too much in the way of intrusive checks or account restrictions. But Phil's a much bigger baller than I am, so he might notice it more.
Just to back what Phil already stated. So based on the numbers and comparing 2021 with 2022, just on the sports betting handle in Germany, we see a decline. Although we had a World Cup in 2022 of 18%, right? And this pretty much backs up what Phil is talking about, with players and handle actually moving towards the gray market or the black market. And we should not forget one thing: the tighter regulation actually becomes, the more they advertise the black market. So, and I'm pretty sure this just played a significant role for the white paper in the UK as well, just based on the maximum stake per spin in Germany, which is, cutting a long story short, there's some room to improve.
Yeah, absolutely, Nico. Interesting comment from Bogdan in the chat as well about one online company which has implemented new mandatory loss limits for particularly young customers between the ages of 18 and 19. It'd be interesting to know which company that is, Bogdan, if you want to share that with us either on here or privately. But I mean, we could sit here and talk about the Gambling Review all day, I think, gents, but we can't, sadly. So should we move into some of the big financial results of this week?
Yes, it's Christmas and birthday at the same time. Here we go.
Yeah, Pierre's just been nervously hoping the clock would tick faster so we could get to these results. Evolution is coming up. But I think the best place to start is probably with Kindred Group, as obviously their results were announced alongside some pretty significant news that their board would explore a sale of the whole company, which came as a bit of a surprise to probably their management team. I think I was supposed to have a phone interview with Henrik Charnstam, the CEO, at 8 a.m. on the morning of the results, and that got cancelled the night before. And I was thinking, I'm sure there's something more to this than meets the eye. So he might have only got that news at the last second as well. What was your first reaction to this, Pierre? We know there's been obviously a board member that's been pushing for a sale for a little while now, but were you surprised?
Right, so it's the largest shareholder of Kindred, an activist investor who is pushing for the sale of Kindred. Essentially, they feel that this is the right time. I mean, I'm more curious to understand who would actually buy Kindred at this point in time. It would seem that you would look on the American side, just like MGM acquired Leo Vegas in order to kind of expand their geographical footprint. Are there any other candidates in the US who would potentially be interested in acquiring Kindred? We've talked about this since the inception of the podcast, since the beginning of iGaming Next, that Kindred is the company to acquire for a American-based, either land-based or online operator to expand their geographical footprint. Like an enormous amount of knowledge within Kindred, experience, reasonable priced company, so on and so forth. Obviously, they have been building vertical technology, vertical integration technology. They seem to build something that is ripe for acquisition. But looking at the market today, the dust has somewhat settled on the North American market, and there isn't really that many potential buyers out there anymore. But I would actually highlight DraftKings as one potential acquirer in this point. I think DraftKings obviously previously have been trying to acquire Entain. A couple of years ago, when DraftKings share price shot in the sky, they tried to basically acquire Entain through the massive valuation of the company and leverage that to acquire Entain. That fell through eventually. And you would imagine today then, if DraftKings would be interested to kind of look elsewhere than only the United States and Canada, that Kindred would be a good, suitable acquisition target. They have like a 2.5 billion euro market cap. Kindred, in comparison to the 10 billion market cap of DraftKings currently. That's pretty much the only kind of suitable acquirer that I can see today. If it wouldn't go in the hands of private equity and you take like a private equity investment firm would take Kindred off the stock market. That's another potential argument as well, that Kindred is pursuing regulated markets only, more or less. Like that's the target, right? To derive as much revenues as possible from regulated markets. But maybe a private equity company that could take Kindred off of the stock market could pursue a bit more aggressive strategy in order to increase revenue through Kindred. So that's my immediate reaction just in regards to the sale itself.
Yeah, interesting. So DraftKings, Pierre thinks is a credible candidate. I'm not so sure about DraftKings. I think just because they are so US focused and they're making serious momentum in terms of market share, and also I got a newsletter from Eilers and Krychek just before we came online that suggested that DraftKings are actually now becoming the number one operator in the US for iGaming as well, and overtaking BetMGM. So I think they're optimizing and they're working really well towards strategic goals. I think maybe an acquisition of that kind would be possibly a bit of a spanner in the works at the moment, just when they're sort of tilting the scale on the way to profitability. But our good friend Alan Bowden on Twitter, luckily, has already come up with a solution to this question. I think we've got the screenshot to show you here. There you go, Pierre. You'll be pleased to know he's already completed the strategic review for Kindred. Sell the Western European, Danish and Swedish business, Unibet and 32Red to Flutter or Entain. Keep the platform and run the remaining grey Nordic and Euro stuff as a private equity buyout. Anders didn't really want to retire anyway. And then he's obviously talking about Anders Strom there, who was the founder of both Kindred and Kambi, who sort of stepped away from the business in 2021. So yeah, potentially he could lead a kind of private equity spin out of the Kindred business.
Yeah, that's definitely one theory, that's for sure.
You were so right though about Kindred's regulated mix and focus on regulated markets. I think for Q1, which we're talking about, their share of revenue from regulated markets was 81%, which is really high, higher than most of their competitors. But despite all of this, like, they're still going to be quite unattractive as an M&A prospect, because Norway is a really significant market for them, and it's not regulated. It's super anti-unlicensed companies and protective of the monopoly. So I think for any company in the US particularly that is interested in compliance, that's going to be a massive red flag. And they're sort of in this difficult position where, you know, they focused really hard on regulated markets and they've enjoyed none of the upside from emerging markets. But a sale could still be affected by the fact that Norway is kind of, you know, proving a drag.
And similarly, when LeoVegas was acquired by BetMGM, LeoVegas also had to pull out from a lot of the unregulated markets, right? So we saw the last report that LeoVegas announced. They obviously have dropped a lot in GGR and revenue since before the acquisition, for that purpose, that they have actually needed to pull out from markets. Also, just a quick detour here as well. Katie is asking if Betson would be one of the potential acquirers of Kindred. I think that would be kind of a hard no. Betson today is much smaller in terms of market cap, revenue, so on and so forth, than Kindred. So Betson is about 1.5 billion euro market cap versus Kindred 2.5 billion. So it's not unheard of that you do reverse takeovers, right? But in this case, I don't think Betson would be. Betson is a quite conservative company. They do their own thing. They are doing really well. They are pursuing their growth markets, and we never say never, right? But I think that would be one of the more unlikely acquisition targets potentially.
Yeah, that's pretty much what they said at 888 PLC taking over William Hill, when the
Exactly.
way smaller fish actually, it's dealing with biting a portion of the bigger fish. But I would just suggest another name, and just based on the conversation, Jake, we had last week. What about Yahoo? First of all, they are one of the three biggest daily fantasy sports companies after the regular suspects of FanDuel and DraftKings. They just bought Wager as well, and they just need to extend their revenue stream with a final sports betting offering as well. Last week we talked about numbers, if I'm not mistaken. In Ontario, DraftKings was able to convert roughly 60-65% of their own users to become active punters. And I'm pretty sure that even Yahoo might be thinking about, okay, so we have a massive user basis of daily fantasy sports persons, and we just want to extend the revenue stream. And I'm pretty sure their pockets are deep enough to just spend some money off the boys and girls being eager to continue their journey to zero.
Well, we'll be happy to invite the CEO of Yahoo to the podcast whenever that announcement comes.
Yeah, I think that prediction is what we call a long shot in gambling, Nico. But could happen. Could happen.
Or Phil Pearson's theory here that Evo decides, fuck it, let's put this RNG side that isn't working as well aside, and let's just go B2C and acquire Kindred. I like it.
Yeah, I think that's the perfect segue as well. If we move on to Evolution now, we can talk about the numbers and some of the news angles in a second. But Martin Carlson, the chief executive, was actually asked on today's analyst call about M&A and whether Evolution would ever kind of branch out into, maybe non-casino verticals like sports betting, or would it acquire another company in the space? He basically said no. He said we want phenomenal. Yeah, he said we want phenomenal hardware combined with software, and they bought that DigiWheel business, which was kind of a spinning wheel that they could add to their live casino portfolio. And he said, if we wouldn't hesitate if we could find that type of acquisition again. So I can't see that happening. There's been a bit of talk of them buying Kambi as well in the past to expand into sports betting, but I don't think that's going to happen anytime soon. That's for sure.
Oh, it seems like they need to focus first and foremost on getting the RNG side of the business to hit the target.
Well, let's jump into that then, Pierre. Do you want to explain to our listeners? Because obviously we talk in quite glowing terms about Evolution, and their reports speak for themselves. But it's not all sunshine and rainbows, to borrow a phrase from yourself.
Yeah, exactly. So I like, in the spirit of not putting myself on a pedestal, I like to read the quarterly reports before the markets open and before I read any commentary, and then just guess whether the market's going to react positively or negatively. And I can say that I'm right about half the time, which is basically it's just really unpredictable. The market's going to react very differently to what you think, even though you think that you read a report and you have all the answers. But in this case, it was really difficult actually to understand how the markets were going to react to this report, because there are two stories in this report that are conflicting against each other. So on the one hand, you have an overall fantastic financial performance. Evolution beat all the analyst expectations on all metrics. Okay, it's a great report from a purely financial point of view. However, then the other side of this coin is the fact that this is the first sequential quarter where Evolution decreases the RNG revenue. So on the live side of the business, they have two arms, right? They have live and they have slots, or RNG as they call it. So the live side is performing incredibly well. That is the bread and butter of Evolution. It's always been. They have a near monopoly and they are doing great. But then this promise of the RNG side of the business to become a substantial part of the revenue mix has not come true yet. It started with the acquisition of NetEnt. It continued with the acquisition of No Limit City, Big Time Gaming, but they haven't been able to increase revenue. They have bought revenue, right, when they have acquired this company, but they haven't been able to increase the revenue organically in these companies. And this is always the big question mark in these reports. If Evolution is going to be able to reach this double-digit growth on the RNG segment as they are setting out the goal to be. But this quarter, they actually decreased the amount of revenue in the RNG segment compared to Q4 of 2022. And so that's a significant kind of downturn for Evolution, like a really big negative in the column here. In an otherwise overall fantastic report. And I was looking at some comments, and I was speaking to Phil here a little bit previously, and Phil points out that the games that are being released through Evolution are just not that great anymore. He's saying that the graphics are not like incredible compared to the competition. The games are just not super exciting. And I heard another comment as well that it's not only about the games, but also about the account management, that account management from their rivals, from their competitors, are much more aggressive. So other suppliers would be much more aggressive with their campaigns, with the kind of outreach to operators, ensuring that they are always promoted on the front page, so on and so forth, so that the games are much more visible at times than what Evolution are. Obviously, Evolution also charges much higher prices than their competitors like Pragmatic and so on. And as a final point, at the same time as we are seeing a slowdown with Evolution's RNG segment, there's growth within their competitors like Pragmatic, Relax, and Light & Wonder. So that makes you, of course, wonder what is the future of their RNG segment in Evolution, and what should shareholders expect as we go into the future. Should they kind of accept the fact that live will always remain like 90+% of the total revenue mix, or will Evolution be able to grow and kind of balance that revenue mix between live and RNG from at some point? That's the summary that as I see it, at least.
Yeah, and I think it's worth touching on Evolution's own internal targets for RNG, which is double-digit growth from the division. They've said that they need to improve, and that timeline is not linear. And the CFO said in today's call that he doesn't see a turnaround happening in Q2 or Q3. So this could be some time off for them to get that right. But interesting comments from you and both Phil. I'd be interesting to know who's doing slots really well right now, because if they're an independent studio, then they might become an acquisition target for the likes of Evolution or somebody else. But yeah, I mean, we're not the only people to have spotted this decline, and not decline, but sequential decline in RNG. So Paul Leyland of Regulus Partners, who's a great gambling analyst who we reference quite often, he described the slots performance this morning as anemic, and he said Evolution has still not worked out how to turn around NetEnt, and even a string of better quality slots content acquisitions has achieved nothing more than filling a hole. It's a tired content library sold at .com prices and remains something of a millstone in our view. So yeah, pretty much everybody can see what the red flag is for Evo.
Yeah, and I hear as well. I definitely don't have great insight in this, but maybe Phil can help us in the chat here. But what I hear as well is that the traditional massive NetEnt hits, like for example Starburst, Dead Alive, and so on, that they are now kind of falling from grace. So say that they've been on top, and they've been a player's favorite for many years. And obviously these are kind of aging RNG games, but they are now kind of starting to fall from grace, and potentially that would be part of the reason as well why we see a slowdown on the RNG side as well. And if Evolution is not able to produce new games on the RNG side that brings excitement, then the question is like, how long can they survive out of the kind of legacy titles? It'd be great to have Phil's comment on that side as well, if he sees relevance. I see as well a comment from Lars Nilsson here, who's asking, like, does it matter that much that RNG has no success? And I would definitely say that yes, it does matter, because when Evolution embarked on this acquisition spree a couple of years ago, it was very much with the backdrop of this is now going to be the major revenue driver in the company. And if we look at organizations like Pragmatic Play, they generate a similar amount of GGR as Evolution. Only difference is that they do that pretty much only via their RNG segment, right? So if you get that segment right, it's a huge revenue driver for the company, right? And that is what the investors were hoping, is that this will add to the revenue mix and add to the organic growth of the company in order to justify these really high share prices like we saw 2 years ago, when Evolution was trading at a PE ratio of like 70 or something like that. So investors were expecting, obviously, the RNG side to become a much bigger success than it was. And if Evolution can turn this around and they can start growing the RNG segment, like what we saw with Relax Gaming, for example, in the quarterly report of Evolution, the quarterly report of Kindred, is Relax Gaming, which is exclusively producing slot games, increased revenues by almost 100% year on year. Right, that's a remarkable increase from a major slot supplier. So the possibility is there to grow if Evolution can get it right with new games, more aggressive account management, and perhaps there are other points there as well.
Yeah, I think all good points made there, Pierre. And you can kind of, you can see where Lars is coming from in that, when a company sort of smashes every metric and is absolutely ruthless in its, operations and efficiency, like, it's quite easy to single out the one thing in the book that isn't up to scratch. But you say, does it even matter that it's not a success? Well, I would say ask the Evolution management team that. They're not going to be happy about this at all, because it shows, this is the first time they've looked to diversify outside of live casino, and if that's a failure, then I think we're right to sort of ask questions of that strategy.
Right, and it does to the risk profile as well of the company, right? I mean, they currently, obviously, Evolution have more or less a monopoly on live casino. Certainly in the United States, they have a monopoly on live casino currently, and in Europe, they are, by far the preferred supplier, and so on and so forth. But how much more can they grow on live? This has been a question for many, many years, right? It's like people say, is SEO dead? It's like a typical meme. That people are always saying, like, how much more can Evolution grow on live? And then they constantly, overperform and do much better than what people think. But it doesn't discount the fact that Evolution today are surviving off of this kind of one segment of the market, and being able to diversify that revenue mix into a different segment as well of the market in RNG is also important to feel more comfortable, to sleep better at night as an investor, for sure.
Yeah, Nico, I don't know about you, but I've been listening to Pierre speak today, and him saying about how he gets up early to read the reports before anybody else. So, in other words, before they were cool. He's also got his hair in this new man done now. I think he's trying to become the ultimate hipster of online gambling. What do you reckon?
First of all, he always has been the sunshine. So he always has been the sunshine. And I was lucky enough, to do the Dynamic Duo show with him for quite a while. So I was always kind of gaining a little bit of his sunlight as well. But jokes aside a little bit. And touching down on the Evolution numbers. First of all, we are speaking about big numbers as well. And of course, they have a little bit of a drawback of roughly, if I'm not mistaken, 4.1% in revenue of our RNG game compared to the last quarter. But on a year-on-year basis, they still increased by more than 11%, with a total revenue amounting up to 70 million in Q1. So if I'm not mistaken, they still made a lot of money just on their RNG games. But as already pointed out by Pierre, we don't know for sure on which kind of games and providers this is based, and did they actually turn around one of their acquisition. But one thing is for sure, they obviously did the trick and found the magic mojo and sauce on how to run a live casino segment. And I'm pretty sure, although a lot of their competitors are trying hard to actually catch up with them, they just outperform each and everybody in the live casino segment.
Yeah, absolutely. And it should also be added that the PE ratio of Evolution today is a lot more realistic than what it was in 2021, in kind of April 2021, when the share price peaked and we saw PE ratios of like 70 to 75 and stuff like that. Now we see a PE ratio of around 30, which seems more reasonable. Obviously, Evolution is a growth company, and there isn't really anything, even though they, as kind of to Lars' point, even though they aren't really able to grow the RNG segment so far, they also don't really have anything in the negative column, in the sense of, is there any sign of a slowdown? Is there any kind of anything that's speaking against Evolution on the live segment? And there isn't really anything that is clear today. If we look at any report in the last couple of years, for sure, in Evolution, and if we look at the industry in its entirety, that speaks against the live side of Evolution today. So it seems to be a very stable company, and we can see that in the financial numbers, of course, that they are just steadily growing. We always make this joke that Evolution, they don't even mention all-time high in their report, because they break all-time high every single report in terms of revenue, and it's been like that for as long as they have existed, more or less. They are just a machine, right? It's a predictable company, predictable revenue increases each quarter, and they just keep delivering and delivering. But then as Phil points out there in the comment as well, RNG segment is where it seems to be kind of in the back seat right now.
Yeah, exactly. Yeah, I don't agree with everything in Phil's comment there, saying it's the easiest job ever to work for Evolution. But I think that the line that says Evo are managing RNG like they are too busy for RNG, there might be some truth to that in terms of their relentless focus on live casino. But PA, we've only got a few minutes left. You mentioned all-time high revenues there, and one company that does like to say that they've reached a new all-time high is Betson. Who managed that milestone again in Q1 of 2023 with revenue of 222 million. This is a fascinating company. Obviously, we love discussing them. And just to throw back to Katie's question earlier about the differences between Betson and Kindred, I think, culturally they're worlds apart, as you can see from their kind of appetite for grey or emerging markets compared to Kindred's, because I think we've got a graphic here, a pie chart of Betson revenues by region for you, and Central and Eastern Europe and Central Asia make up almost half of Q1 revenue, 42% there at 93.5 million euros, and that was also the highest rate of growth in any region at 75% increase year on year. So we can see where their revenue is coming from, and I think while Kindred was around 81% regulated mix, I think Betson was in the 30s. But look at how their finances performing compared to Kindred's. What are your thoughts, guys?
Yeah, I mean, something I find interesting, I'm looking at the report now because I want to see kind of in these, 42% revenue from Central Eastern Europe and Central East Asia, or however you pronounce it, but let's call it Asia. It's obviously a massive part of the revenue stream, and Betson is it's kind of a little bit kind of a part of Betson revenue they don't really like to talk too much about. And looking at the report as well, it's a short paragraph about this revenue. They talk about how Croatia and Greece has showed continued positive trends. Georgia has showed positive trends. Estonia positive trends, but this obviously does not tell the full kind of idea here of what is behind that revenue growth. And as you point out, Jake, the risk appetite within Betson is quite high, of course. And much of these revenues are derived from markets that are certainly not regulated for sure. But nonetheless, Betson is performing extremely well. And like always, they hit the nail on its head when they chose to enter the Latin American market rather than the North American market a couple of years ago. And they seem to be growing in all sub-markets there in Latin America as well, which is kind of the story of this report as well. Pontus Lindvall is obviously at the helm of Betson, and he's delivering quarter after quarter. The fact that they kept Pontus Lindvall and that he saved himself through his parents that are major shareholders in the company when part of the board wanted to kick him out. It's clearly paid dividends, and I can just say hats off to Betson. It's a great report.
Yeah, I think for all those differences, there are still quite big similarities between Kindred and Betson as well. Obviously, they both have Norway as a bit of a headache at the moment, and have lost revenues from there. But also, you mentioned the US. Neither of their US strategies have worked at all. Kindred entered on a kind of B2C format that's not worked at all, and Betson entered on a B2B format, trying to sell its sportsbook solution to sports betting operators in the US. I think they went live, so they themselves are their only client as it stands. They went live in March of last year, sort of with the plan to advertise the platform to other clients, and they've not managed to sign one yet. So you could say that they've failed in the US as well. But the biggest thing between those two companies is the Netherlands, where Kindred's been able to basically re-enter on a regulated basis and carve out a kind of market-leading share as it had before, whereas Betson still doesn't have a license.
Right, they're still waiting for a license in Netherlands. Yeah, that's
right.
Exactly.
And now they face this situation of potentially having to re-enter that market when there's an advertising ban as well from the 1st of July. So they're going to enter the market without their customer base from before and without the ability to market any of their products outside of digital marketing. So, they've pretty much lost the Netherlands altogether, you would argue. And I asked Pontus this morning whether they were tempted to just withdraw that Netherlands application altogether. And he paused for a very long time, even for Pontus. I thought my screen had frozen. But he eventually said, no, we're still ongoing with that application, and we'll wait to see what happens. But that's another major drag for them, I think, is how long this process has taken to get back in the Netherlands.
Absolutely. And as a final point as well, I mean, Betson has been performing extremely well on the stock market in the last couple of years, even during this kind of like slowdown on the market. They are now at an all-time high as a share price, I think. No, not all-time high. They are. I mean, if you look back like 8 years, they are like on an all-time high since 2015 was the last time they saw a higher share price. But nonetheless, they have been just performing extremely well in the last couple of years. The last few quarterly reports have certainly shown that. Again, it's the kind of the revenge of Pontus. He's back and he's angry, and he's here to prove everyone wrong. And definitely his mother is very proud of him, as we point out too.
Yeah, and he's a super fashionable individual as well, Nico. He'd be proud of that shirt that you're wearing today, I think.
Yeah, I was just looking for the banter. I was just waiting for the banter, so all good. But as each and every one of you knows, a person pretty close to me, as he belongs to the family, René Janssen, is running the KSA over there in the Netherlands. So if Pontus just wants to proceed with his application, just ask Pierre for my number, and I will make things happen. No worries.
Yeah, you can phone in a few favors. I like it. Great stuff, Nico. Awesome to have you on today. Thank you so much, as always. I'm sure you'll be back with us next week. And Pierre, brilliant to see you on the stream as well. Thank you so much to everybody that's commented as well. It's been a lively chat section today. Lars, Phil, Katie, Alexi, everyone that's commented, you've been keeping it going for us. So thank you very much. And of course, finally, last but not least, to our main sponsors, Betson and also to YOLO Group. Any final words, gentlemen, before we go?
No, I think I suggested like a super short comment on Kambi as well, who reported as well, is that I was really surprised actually that Kambi's share price after that report decreased by like 12%, although it recovered a little bit since then. But Kambi is being pretty clear on the fact that they are setting out this new strategy for themselves, and obviously the numbers are a little bit difficult to kind of dig into and to understand a little bit more. They are increasing revenue, but they're decreasing their EBITDA. So actually, the revenue growth is like 19% quarter on quarter to last year, which is really positive. But then they are mentioning that EBITDA, the decrease in EBITDA is due to kind of one-off costs and stuff like that. And it seems that they are developing the kind of AI tools, and they are the only report, by the way, in these four that mentions the word AI. And someone was joking about evolution and that Martin Collison has missed the AI train, and that's why the stock was not doing that well today. But I don't know how much truth there is behind that. But in any case, I just wanted to kind of point out Kambi as well as a report that, in my opinion, was one of those reports I thought was going to be a good report, but then the markets just totally punished it. But yeah, anyway, it's been a great session here, Jake. Thank you so much for having me on again.
No, absolute pleasure. And you should know by now, Pierre, better than to try and second guess the stock market. But I'm sure there'll be more results next week for you to try and improve. All right, thanks everybody, and thanks so much for listening. We'll be back next Thursday.
Summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship.